like that, I think.
We've got a couple more minutes. Maybe just one question is, what brings money back into oil and gas? Do returns bring it back? Or is it the industry getting smarter and telling a better story? They've historically done a bad job of talking about
we're the worst. We're the absolute worst at PR. I mean, all the things like the water bottle you just drank out of. I mean, there's so many things in the world that come from like petrochem and products that are derived from what we do as an industry. But without a doubt, like, really bad on the PR side. Don't know if that changes. I'd say returns absolutely will help. I think the industry it'll remain smaller than probably what it's been previous decade or two. And that'll be a bit of that'll be the function, the rise of renewables and other forms of energy in the world. But it's certainly got a role to play. I think just what you couldn't do is have inferior returns and be an ESG liability. That's a real quick way for like you to not attract new investors.
Yeah.
Now, when we get back to the point, if we're actually delivering kind of robust, kind of mid-teens returns, et cetera, and I do think in an era of lower reinvestment on behalf of the oil and gas companies, two things would come out of that. One, higher oil and gas prices, which is reinforcing and good for the oil and gas companies. But two, that discipline, like public oil and gas companies are going to be free cash flow monsters coming up over the next couple of years. And I think that's lost on markets. I think ultimately some healthy and robust dividend kind of payouts for a couple quarters will start to attract some attention, especially in a yield starved world where you just can't find it anywhere else. Yeah. It'll come back around. But I do think it'll probably be a bit of a smaller industry than it was previous decade or decade prior. But look, we'll still be drilling oil and gas wells 25 years from now. So you can't just flip the switch and wish it away. So it's going to remain relevant. I think if returns are good, it's back to the cigarette analogy, but like somebody's going to like making 20% on their money, so as long as we deliver, there will be investors out there. Yeah. And ultimately I think we do it infinitely better than 20 years ago, 40 years ago when it comes to the ESG kind of elements and everything that goes into environmental and being good stewards. I think 99% of our industry is pretty fantastic when it comes to that. I think we just don't have a good kind of PR machine out there that really kind of reinforces that in the average U.S. consumer. But I think overall as an industry, we're good stewards.
Yeah.
Yeah.
Aubrey was the last great PR machine when it came into the Barnett. I remember those billboards the city.
Oh, yeah.
All right. We have 1 minute. Let's leave people hanging on. Are there a few statistics on nickel that will leave people kind of just shocked as you see it today? Or oil and gas?
Yeah. Here's one that'll really surprise the heck out of you. And again, back to EIA, IEA projections, but in 2030, the size of the coal industry will actually still be 2 times that of the battery metals industry, believe it or not. Yeah. So I was reading through their kind of energy transition report, and it's just a reminder, like, even as quick as we're transitioning, and back to your earlier comments on Africa and Asia, like, China's still building the heck out of coal plants like daily. So, the world's growing and needs more energy of all forms, and some more advanced countries might be making energy transition that others are maybe one iteration prior, and they're getting coal-fired electricity for the first time. And so I found that really interesting. The U.S. has clearly moved on from coal, and you can see it in every statistic on the power generation side. But other places in the world, like it's more emerging than it is kind of exiting stage right. So I found that interesting. But so one interesting statistic as you think about battery metals and EV targets, where we want to go, as a global population. This is how short we are just on current pace of adoption of EVs in the world between now and 2030. And so from a copper perspective, you're basically going to be 1 million tons per annum short of that. And so what does that kind of imply is, and this is a good analogy for the oil and gas guys, but Escondida is the largest copper mine in the world. You're in essence going to be short the largest mine globally. You need to find one of those every 24 months between now and 2030 to suffice current EV targets. And so, the biggest copper mines in the world aren't falling off trees that was discovered in the 60s, I think it was. And so that's just not something that comes along often. And then to put it into an oil and gas perspective, it would be the equivalent of me telling you, great, I need you to go start a Pioneer Natural Resources and build it in the next 24 months, and then do that every 24 months between now and 2030. And you're like, dude, I can't do that. It's just not realistic. And so at a certain point, copper will have scarcity. Scarcity is going to drive premiums. Copper's an incredible battery metal in that it's it's the second most conductive metal in the world, solely behind silver. Well, silver's more expensive, so that's why we don't have silver electrical wires. We have copper. So at a certain point, copper's ripped up from 4,000 a ton to 10,000 a ton. Well, at a certain point, you're going to reach a price point where it's, gosh, what's next? What else can we potentially substitute? That would be aluminum, but it's got half the conductivity of copper. So really, at current prices, you're starting to get where you'd contemplate other sources, but invariably, it's really a function of just it's going to be higher prices, all the way around. And so it's really interesting, just kind of the severe kind of supply crunch that's coming on the copper side, and nickel, cobalt, et cetera. You go down the list, because when you're trying to reach all these aspirations, there's not a real kind of pathway to get there on the natural resources side. And then you go say, oh, it's going to take you 5 years to permit a mine. 5 years is too late. Every OEM is saying they're going to be all electric in 5 years. Where there's a lack of consistency between what guys want to do and then ultimately what the industry is really kind of capable of doing or delivering. So that's why we're bulls on the battery metal side, is because with the thematic shift and everybody's lurching towards we want to do this. Well, they're really kind of forgetting the base ingredients aren't just on the shelf ready to grab to go do that. And so that'll drive competition. 10 battery gigafactories get built. They're trying to source all the raw materials they need to build their batteries. Just going to really drive scarcity premium for certain battery metals that exist out there. So bullish on that over the coming decade. But like we were saying, bullish on oil and gas too, for different reasons, not in the dramatic growth side, but just the dramatic lack of reinvestment. Yeah. And the world's not driving any less, population's growing. So you really kind of left with, you really need to be reinvesting in all this, even if you are doing an energy transition, because it is a multi-decade event.
Yep. So if you found even if you could find the copper mine every 2 years of that size, is it exasperate even further? Because even if you found it, it's still going to take 5 to 8 years to even explode.
Yeah, that's where it's just a circular. You'll never satisfy what ultimately the globe, the world wants to do in the finite amount of time.
Can I ask you one more question?
Sure.
I know you got to go. You said that at previous times, there were times where it was 30x more CO2 in the air. And when I hear that, and I'm like, the world we live in today, where there's smoke being pumped in, what would have caused 30 times more CO2 back in the day? Do you know the answer to that?
Oh, I don't know. Okay. Volcanoes, et cetera.
Got it. Okay.
But I did see a chart at one point where, we were clearly in one of the valleys as far as CO2 concentration over the millennia, over millions of years of Earth. And I guess they get this from ice packs and when they kind of do those samples. But I guess it would have been volcanoes, et cetera, just the natural cyclicality of the Earth, which I sometimes think we're presumptuous and think humans are driving kind of every kind of climate event that occurs. But, but yeah, when you put it in that context, it was like, well, gosh, not only double, but we could double 10 times in a row CO2 concentrations, and we're still not like maxing out ever what the Earth has seen. So I think Earth's probably a little more resilient than we give it credit for, not to take for granted that there aren't things we need to do to be more sustainable and cleaner as a society. But I like the doomsday stuff. Probably a bit much sometimes.
Yeah.
Yeah.
All right, Rhett, this was fascinating. Thank you so much, man.
Yeah. Thanks for having me. Enjoyed it.
This was awesome.
Yeah. No, appreciate it.